Hi, welcome to this video on advanced market structure. So most of you probably have the complete wrong view on structure, as I did myself for the past few years. This will make structure clear and you will understand which structural points are actually valid and where you should be looking for trades. I just drew a little example over here. As you can see, we have our first low, we have another high, we have a lower low, and then we had a bullish break of structure. Right, we invalidated this previous high and we created a higher high. Now, the accumulation that took place here, obviously that is the accumulation that took place that caused a break of structure, right? So we only want to be trading off of the initial accumulation that caused a break of structure, right? So over here, this part right here, this pullback would be our optimal entry because that is a test of the original accumulation. It's our test of the accumulation that caused a break of structure. Now, the probability is extremely high that we'll have a large reaction from that area, or we'll actually have a bullish continuation. So we could see a situation from this area where we have a move like this and then a continuation down, or we might create a new high. But that little reaction from this area, this move here, even if it's just a reaction and then we continue down, that'll be large enough to catch a 1 to 5 or 1 to 4 RR on the lower time frame. Now, this is our optimal entry because it's a test of the original accumulation, and for a significant structural break to occur, we're speaking about the 4-hourly or the daily time frame. We know that this original accumulation has a lot of institutional orders. That is why when we trade into it, we'll always see a large reaction, because it's them offsetting their original buy positions, and that'll just create a reaction. Now, let's go over to Euro USD. We're going to stay on the daily time frame, and we are going to look at price, and I'm going to explain to you how we view structure and how you should view structure. Now, over here we can see that we have our initial accumulation / origin of this whole bullish leg that I highlighted with this blue arrow here. So this original accumulation caused not a break of structure, but it caused a new high, right? So this accumulation is extremely significant because it created a new high on the daily time frame. Now, you only want to be trading off of this area or the reaccumulation / demand zone that created a new high. This is a high probability reaction once again. As you can see, we had a prior high over here, right there. And before we created a new high, we had this down close bearish candle. So we had a pullback before we created a new high. So what actually took place here was a reaccumulation. Now, you can very easily drop down to the lower time frame, just wait for a valid break of structure on the lower time frame, and then take a long position from here and just scalp it. So this doesn't look like a very relevant move, but because we're on the daily time frame, it looks small, but in actuality this move was a couple hundred pips. So we can see that was a 300 pip move. So that's why we always start on the daily time frame and we identify our zones. Now, this reaccumulation here obviously yet again had a lot of institutional orders, and we see that reaction. Now, over here we have our origin, and this is where we want to be trading. Now, we traded into our origin, and this is where I look for accumulation. So we had our initial accumulation that caused that new high. Now we know in this area we will have a reaction. So in this case we had a massive reaction. We didn't create a new high, but this reaction was more than large enough to give you a massive RR trade. It was almost a 600 pip move in this area, and that is simply just playing off of this initial accumulation, which was the origin of this bullish leg, right? Now, a lot of traders get confused when it comes to this. So we're looking at this area, and a bunch of traders will tell you, well, this is bearish, right? We're bearish in this area. We're going to create a new low because we're creating like lower lows, lower highs, etc., all the way down. But that's not the case, because this is just a complex pullback. This is simply a leg, a pullback leg, and now we've continued. So in this area here, we failed to create a new high. So this is where it gets interesting. Now, this point here, is intermediate structure. This is not true structure, it is intermediate structure. Our true structural point is at the origin. You only want to view structure from the origin of the move and then the reaccumulation along the way that caused the break of structure. That is the only two places you want to be looking at. Now, over here, we invalidated this low. So this supply zone is extremely interesting. So the fact that we failed to create a new high, we pushed down, and then look what happened here. Right, we have this retail trend line that formed. So in this area, we know a lot of traders placing sell positions, following the trend line, etc. And this massive buy to sell movement liquidated them. Now, in a normal situation, this isn't enough to validate taking a trade. However, what happened? This supply zone here caused a bearish break of structure. It caused an intermediate break of structure, right? We broke this intermediate structure, and this now turns into a high probability bearish continuation zone because we have these two confluences. Firstly, this move took out liquidity, so it took retail traders and smaller hedge funds out of their trades. Now, also something to note is that moves like this aren't just to take out retail traders. You have to understand that it is larger hedge funds and larger institutions taking out smaller institutions, because the retail pool of liquidity is really small. We are nothing compared to smaller hedge funds or smaller institutions. They're dropping thousands of lots per trade, whereas a retail trader might be dropping one or two. So also note, it's not just retail traders who are being liquidated in these moves. It's also larger institutions and hedge funds who are also getting liquidated. Now, we broke this intermediate structure, and you could have taken a short position off of this area here. But I do not recommend doing that, because there is, again, a high probability that we might test something a bit lower in here. As you can see, we got a reaction just a bit deeper into this original accumulation. And that just shows you how important the origin of these moves are. If you trade off these areas, you had multiple opportunities to get into a long position. Now, we did break the structure here, and now we're continuing short, right? And I'm not going to be trading anywhere in here. There's no reason for me to be looking for long positions or short positions at this point. Price is still bullish. It is still bullish because over here we have an accumulation, right? But this is a reaccumulation that caused our break, right? That caused the break of this high. Now, there's a lot of repetition here, right? We saw that exact same thing just on a smaller scale over here. It's the same concept. We have our initial accumulation that created this whole leg, right? Over here, we had that initial accumulation, we created this whole leg. And then here, we have that little reaccumulation that caused the break of structure, right? That broke a previous structural high. And over here, that is the exact same thing, just on a smaller scale. So now, we know for a fact that this is going to hold and give us a massive reaction. Now, why would you be trading in any of these areas right now if you can just wait for price to come into your higher probability zone, and then you can drop down to the lower time frame and take a position? So that is what I'm waiting for. There is an opportunity at the moment on Euro USD to take a short position. Kind of have a little textbook distribution where we created a bunch of liquidity, we got news coming out, and we ran all of these highs, right? Now we're pushing down, and we should continue down. But I'm not going to be taking trades here, even though I can identify setups on the lower time frame, right? I'm not going to be taking a trade because it doesn't make sense for me to take risk when it's not the highest probability possible. So I'm going to be waiting for a push into our daily time frame zone. You guys really need to remember that there are 28 different pairs and a bunch of different asset classes you can be trading. So you can just simply set reminders at your zones and then take trades off of them. Trust me, you will find a few high probability setups a week. You don't have to force trades, and that's where most people go wrong. You're trying to trade off the minute time frame or the 5 minute time frame, and you're just trading somewhere where you shouldn't be trading. Wait to get into those zones and those areas where you know you have a higher probability of success. It really, if your goals are to pass the FTMO challenge or just to gain like 5 or 10% a month, which is absolutely phenomenal, you just need 1 or 2 setups. You need a 1 to 10, a 1 to 5, and then you're there. You don't have to trade 10 times a day, and that's what most people don't understand. You can trade once a week and you can be profitable. You can pass your FTMO in a single trade, but you have to wait for that opportunity. And that's where most people go wrong. And unfortunately, that's just something you have to realize yourself. You can't teach that. And because price is fractal, we can see that same concept playing out again, right? We have our high here, right? Over here, we have that pullback, that reaccumulation that caused our new high. And as you can see, right, when we tested it, it held perfectly. You got a big move from there. Now, where's our origin of the move? Yeah, right? So if you played off the origin, yet again on the hourly time frame, you got a massive move. Now, if you're trading on M1 or M5 in these zones, you can catch massive RR trades. Now, I'm just using this as an example purely just to kind of show you again that the concept I'm teaching works perfectly, and that's how you should be viewing structure. I'm not saying I'm taking trades off these areas. I'm waiting for my daily time frame area. Now, if you get much better at structure and you understand how it works and you understand the origin better and these reaccumulations that take place, you can trade off of these hourly zones. But why do that when you can just wait a few days to get into your true zone where you can then look for a much higher probability long position? I'm going to go over to USD Chef and I can just show you another example of how this works, and it's just going to sink in for you on how clear this is and how simple it is. Right now, let's look at USD Chef on the daily time frame. Okay, we ran out this high, the structural high, right? We created a new high over here. So we created a new high here. Now, which move would you say created this new high? It's really simple. Initial accumulation here, right? And then that reaccumulation we speak of every time that caused the break of structure. Over here, I'm going to make it pink. We have that reaccumulation that created a new high. So what do you want to do? You want to trade off either this reaccumulation or this one. So you're going to drop down to the lower time frame, wait for an accumulation to take place, and then take a long position. Now, here's our origin, initial accumulation. Here's our reaccumulation that caused this new high. And bear in mind, this accumulation caused this whole leg. This reaccumulation created a new high. Now, we simply trade into that, and we have another reaccumulation taking place. As easy as that. So we create another reaccumulation and we test it over here. Oh damn, now we made a new high yet again, right? We haven't made a new high here, but structure remains bullish. Now simply this move here, this reaccumulation tested this reaccumulation. Now we're going to be waiting to take a long position over here. I'm simply going to wait for a break of structure on the lower time frame, maybe a lower time frame, so a fractal accumulation to take place, and then I can take a long position, a really, really high probability long position. That's the only trades I want to be taking. So now, if we trade back into this, I'm not saying that we're going to create a new high or create a high that's higher than that previous high, but I know we're going to get a reaction. And if we just get a reaction, a couple of pips on the daily time frame, a small move like that, really insignificant on the daily time frame, but if you've entered on M1 or M5 with a 5 to 10 pip stop, you can catch 100 pips. You can catch a 1 to 10 and pass your trading challenge or meet your trading objectives for the month. So I'm just trying to reiterate that you should wait for the origins of the move and for daily zones, daily demand zones, daily reaccumulations. That is where you want to be trading. Stop trading on M1 or M5 in random zones. If you see a 1 minute break of structure, that doesn't mean anything at all, right? It doesn't mean anything. So let's take an example on M1, right? And let's look at this. So we're not in a zone that's of importance to us. Our zone's over here. But I highlighted this zone here, right? Because we created a new high. Now let's look. Price is fractal, right? Which reaccumulation after the origin of the move will hold? Well, here we had a reaccumulation in this zone here that created our new high, right? Here's our reaccumulation, we created a new high, and here's our original accumulation. So you could take a trade off this area, or you can wait for us to test the original accumulation. So I've shown you examples on M1, H1, and the daily time frame, and the concepts remain exactly the same. However, if you wait for price to come into the daily zones, it's a higher probability move, and then you can wait for an M1 accumulation to take place and wait for a significant break of structure, because we see traders all the time, right, looking at price and viewing structure like this. You'll say, okay, here's our low, we created a new high, oh, we broke that low, okay, we're bearish now, so let's take a short position off the supply zone that broke this demand. No, like, what the fuck are you doing? You can't do that at all. You have to view structure from the origin of the move and the reaccumulations. And I'm sorry that I'm repeating myself constantly, but I'm just trying to make this sink in. And it's really important for you to understand this concept, because it will change your trading. So maybe look at a few more pairs and then set reminders at these daily zones. Just simply set a price reminder here. Get an alert to your phone. You can set it on MetaTrader or TradingView. They'll send you an email when price taps into your zone, and then monitor it. You don't have to spend all day at the charts. Nobody wants to do that. Set reminders, don't overtrade, and wait for these zones, the origins of the move or the reaccumulation that created the break of structure. And that's where you want to be trading. And that's all you need to know. So please leave a like on the video and subscribe. And please drop a comment with any questions, and we'll be more than happy to answer. There's a link to our free Telegram group in the description. Feel free to join. We send daily analysis and some setups that we're taking that you can take along with us. I hope you enjoyed the video. Please share it with your friends, and I'm out. I'll speak to you guys next week.